Hello, investors and traders, and welcome to the weekly market report. I'm Monte, Chief Technical Analyst with Sticky Trades, and we are about 5 minutes away before the market closes on this Thursday, March 28th. Before we get into the market analysis, I just want to show you this 7-point trading checklist. All of the analysis that I do is based off of signals that I put together for our members. Now, it is because of this 7-point trading checklist that we have such a high percentage of accuracy with regard to hitting price targets. And if you've been following along with our member page, especially the members who get the trade publications, you'll know that we are tracking over 80% accuracy, which is phenomenal. Now, as the markets are getting ready to close, I thought it would be a good idea to go over some of the news and data that's normally left for the end of the video, but I'm going to change things up a little bit. I want to give you a little bit more educational content to add some value to the weekly market report here for you. Now, if you look at what's happening with the banks, this is a dramatic drop in the cash deposits in these banks to the tune of $17.2 billion dropped over the last week. And this is going to put some pressure, especially on the regional banks who are already challenged to meet the financial requirements to be able to loan money. As I've said before, I do believe that the smaller banks are on the verge of collapse. And I've also mentioned that I think this is a concerted effort by the larger, bigger banks, the banks that are too big to fail, to come in and scoop up these regional banks and acquire their assets for maybe pennies on the dollar. So I do believe FDIC will step in, working with the Fed to arrange for the bigger banks to come in there and save the smaller banks. But I would not be surprised if this starts a downturn in the market, especially in the banking sector. So keep an eye on that. Another thing that I wanted to mention is that if you're paying close attention to the jobs reports, I've often said that these are the numbers that are most easily manipulated. And this is just a little bit of a fact that was put out by Global Markets Investor on X. Since November, the U.S. has lost 1.8 million full-time jobs. But look what's happening in part-time jobs. The labor market has seen 221,000 increased part-time jobs, while the full-time jobs are declining. You see, what does that mean? It means people are quitting their full-time jobs to take 2 part-time jobs because either that's helping them make more money or remain a little bit more flexible with families, travel. It's hard to say, but this does not mean that the economy is that strong with regard to jobs creation. It's just a rearranging of full-time jobs to part-time jobs. So keep that in mind when you watch these jobs reports. Another thing that I want to mention is when the consumer confidence numbers came out this week, we saw a dramatic drop from one month to the next. Look at the drop from February. This forecast of 114.8 came in at 106.7, which was a dramatic jolt to confidence. But look what's happening. They tried to forecast just a hair over what the actual number was in February and still came in short at 104.7. So consumer confidence is dropping, and when consumer confidence drops, guess what? People spend less money because they're saving their cash for that rainy day that they're expecting to see come in the near future. Now, again, we're under a minute right now. We're going into the markets. Here's the DIA. We're down to 9 seconds. And as you can see, as we're getting ready to close here, that is a hanging man right there. There we go. The markets are closed. That just in the last second turned to a spinning top. Now, that spinning top candle is showing up right at a key resistance level. And if you notice, that resistance level is holding on lower volume. You see the volume drop there? On the trading checklist, if I bounce back to that, you can see that we have a volume read is number 2. I look at the type of candle. Remember, we just looked at that as a spinning top. I look at the volume. If the volume is dropping on the way up, that tends to be bearish. And that's why I have volume as the second point in the 7 points on that checklist. So that's very important that you keep an eye on volume, because most people don't pay attention to that. I look at volume as a leading indicator. So as a result of that, I am keeping my downside target here at 391.51. We do have a shortened trading week this week, a 3-day weekend coming up here shortly. And that means next week we could see some selling coming in based on the technicals. So keep that in mind. Now looking at IWM, IWM had a rough day. It started off great, and while it did sneak out with some green on a positive day, look what happened intraday. We rallied up right up until noon and then continued to bleed out all of the gains that were made up until midday. And so if we go back to that daily chart, you'll see again, we have this very small little body candle, but it happens to be a shooting star. Again, going back to that trading checklist, if you look at the candle, shooting star right there, that is a bearish signal. So if you're looking so far at the markets, we have the bearish candle, we have a drop in volume on the way up, and then we go down the list to look at some of the other oscillators and how that price is relating to the moving average. And that gets me to the moving average, the divergence from it. You see, the price has moved quite a bit above the moving average. You can see it does not like staying that far above. We call this the rubber band effect. Imagine for a moment you had a rubber band with one end connected to the price and the other end connected to the moving average. As the rubber band gets stretched, it has a tendency to snap back to that moving average. And I think that's what we're going to see, especially starting next week. Now, I'm keeping that downside target at 200.45. It might take a little while there, but I'm going to keep it in place. Look at the monthly candle right here. We're ending the month of March on what's very close to a hanging man. That's when you have a shadow underneath a smaller body candle. But look at the volume drop at the end of this month. Consistent drop in volume. Oscillators are starting to hinge right here. We have an overbought condition on the CCI. So as we come into April, I do believe we're going to start seeing pivots, especially on the CCI, which could drive us right back to this moving average on IWM especially. Now, if we go and look at the Qs, we're going to see something very similar, except the fact that the Qs closed lower. We already have the oscillators moving lower. You can see the stochastic is pointing lower. We're heading towards this moving average. I have a downside target on the Qs all the way down there, 429.91. I'm not moving that. I'm going to keep it. But we will have to see whether or not the price holds that 20-period moving average. If it does not hold the moving average as support and breaks out below it, we will see that moving average turn into resistance. That's called role reversal. And that's what I'm going to talk about a little bit towards the end of this, how role reversal plays a big part in determining whether or not you're going to go long or short on a swing trade or a shorter term trade. All right, let's go look at SPY. This is the S&P 500 ETF. Look at that small little candle. I mean, that's a doji. You know what that means? That means the opening and the close was exactly the same. Look at the volume. See how it's colored gray? Well, my trading platform is set up so that when the opening and the close are equal and the doji shows up, it helps me identify the dojis with that gray volume candle. And as you can see, as I scroll back, there's not too many times where we see perfect dojis like that. In fact, since the beginning of the year, we have had none. Now, what does that mean? Well, here you have one that is very close to a doji. You see that? And what happened? We usually see dojis and spinning tops form at pivot points. And so being that that's a perfect doji, I'm keeping that downside target on SPY to the downside right there at 514.48. Now that brings me to the VIX. This is the volatility index. And you can see that, again, we have a bullish candle like we had back here, a hammer, which are both bullish. But this bullish candle is a bullish harami. Again, looking at that trading checklist, we have bullish haramis right there. Bullish and bearish engulfing candles, bullish and bearish haramis are pretty much the same. You have right here, this is a bullish harami right there on the VIX. And so I do believe that the VIX is going to start to turn higher. Now remember, for the most part, the VIX is inversely related to the S&P. So as the VIX moves up, the S&P will most likely move lower. And that's why I've kept my downside target on the S&P. Now let's talk a little bit about role reversal here. I'm just going to pick SLV because I talk about that quite a bit. And you can see that today the SLV pivoted higher and it hit my upside target. We did a rapid fire session last night on Wednesday from 6 to 7. I do that every week. And my upside target for SLV was 2271. Now, if I draw the line from former resistance, which is here, you see this pivot? It's like an inverted V. We call that a pivot. That's resistance. If I take that high and I draw a horizontal line right across, you'll see that the resistance, once it was broken right here, turned to support. And you see that happen quite often in many stocks. We even see it happening in Bitcoin. We see it happen in some of the high volatility stocks where you get these beta stocks. These are high beta stocks, which are much more volatile than the market. We tend to see that happen. We even see that happen in the oil sector. You see right here, we had a role reversal all the way back here. See, resistance broken, turns to support. You see that? And now on the way down, we see the opposite occur. It's not always exactly to the penny, but let me draw you the stick figure example here. When support is broken, it generally turns to resistance. You see the support broken turns to resistance. This most closely resembles what I often refer to as the ABCD pattern. I call it also the lightning bolt. You look for the lightning bolt on the chart. Well, if I take this support level right here and I draw a line right across, you see that support level, once it was broken, what happened? We saw the selling pressure come in and then OIH dropped. Now, if you're looking for a buy point, I'm not making this as a recommendation, of course. I'm using this as educational content only. But you can see that if I draw a horizontal line right from that high right here, you see that? If OIH pulls back to that former resistance, again, there's the role reversal. Once broken, you will most likely see the price start to bounce. So you can go through stocks all day long, just look at them very quickly, and I could do that just with the click of a mouse. I could just go between now and, 3 clicks from now, I'll probably find a couple of there we go, right there. You see, here's a resistance area that was broken, and this whole area is turning into a support level. See, again, to repeat, because I teach through repetition, resistance, once broken, turns to support. Now, this week, we put out trade notifications. Almost all of them were bullish or positive delta positions, and we're doing very well. Our equity traders have not had a losing trade yet since the beginning of the year. We're batting 1,000 with the equity trades, and the matrix traders, which are the directional option traders, are doing extremely well as well. So you have the opportunity to join us here at Sticky Trades, and you could open up an account with us. It's absolutely free. You don't have to put money in there, none of that. And if you log in with your account, you'll be able to get your free 7-point trading checklist right from your member dashboard right there. You just go right to the bottom and you could download the PDF or view it in your browser, and it's right there so you can use it when looking at your stocks. So that's it for now. You have a very happy Easter, a good long 3-day weekend, and I'll talk to you next week. So long.